Hello and welcome to today's market update brought to you by NeoTrader.com. Today is December the 15th, 2010. So since our last update, we were waiting for the market to develop into a tradable market. We've had some pretty interesting price action here lately, which I want to share with you today. So let's go and start off with the SPY, the spiders, which represents the S&P 500. So we've seen prices again move up with great momentum here, pulled back to this 25% level. We anticipated prices breaking this trend line, moving to this 125.13 level. This is some pretty strong resistance. In fact, prices came in at 125.20 and 125.23. We were 10 cents off. Not a bad price target. So what do you do when you want to trade this market? Well, first, you want to see if market action is confirming this new price trend. If we look here, we talked about this in previous videos. Prices were increasing, but volume was decreasing. In fact, volume increased when we had a selling day. So this is a very bearish indicator for us. One of the other things we want to look at, and it's pretty similar with all of the charts we're going to look at, is here we have an RSI, a short-term, a medium, and a long-term. And we see that with this price move, the RSI peaked, right, pulled back again, and now we're seeing a lower high, which gives us an indication that this trend may have already run its course, or what we're saying is that it's going to pull back and find some significant correction either on this trend line here or here. Now, if you wanted to trade this market, which I particularly am going to trade this market, this is how I would do it. Now, what I'm looking for is a break in this trend regression channel, which I drew earlier, which we broke here. And what I want to do is I want to place my trade slightly below this level here. Okay, so we're going to sell short at 123.60. Now, one reason why people or traders fail is that they forget to set a stop loss, right? And everything that you do is based upon a reward to risk ratio, and you need a stop loss in order to figure that out. So we have 125.13. We're going to set this at 125.20. And go 100 shares as well. Okay. Submit that. And this is an order that's placed. Once it hits here, we have a stop loss that's automatically set. And we're anticipating prices move down to this 120.02 level, which gives us a great risk or reward to risk ratio. So let's go and look at the diamonds. And again, it's a very similar setup here. Okay. Now, one thing I did want to point out is that with the Russell and the S&P, you've seen this high taken out quite a bit. Here, we're seeing a kind of stunted fifth wave, if you will. And again, just like the other issues that we're going to look at, the relative strength index is coming in lower than this previous high here, which is again an indication that this market is expecting to reverse. So if we again look at a 60-minute chart, what we're going to do is we're going to place a sell order right below this level here. And then we're going to have a stop loss. We never place an order without a stop loss. Right at the 115, we'll call it 51 level. Oh, we're going to call it 52. You never want to set your stop losses on round numbers, 5s and 0s. They typically want to move just a little bit outside of that range. And we're going to do 100 shares here. This is a paper trading account. If you're not paper trading, I highly recommend it before you actually commit any money to the market. It's a good way to really hone your skills and develop some strategies that you can back test eventually. So if prices move below this 114.64 level, we're short this market with a stop loss of 51.52. I expect prices to move down to 114 initially, followed by this level here, which is 113.46. Again, this is a very aggressive trade. It's not for everybody. But it's one that I kind of like, and I might be a little early on this, but I'm okay taking that risk because my risk to reward ratio is fantastic right now. So let's go and look at the Qs. So I'll switch this back to a daily chart. Now with the Qs, we drew some Fibonacci circles, and we had prices that we had forecasted right at this 5470. Watch previous videos, we were talking about this pullback and an eventual leg up, which we have here. And we forecast prices right at the 5470 level. Prices came in right at 5471, excuse me, 5474 for this high. So we were 4 cents off. You know, we're going to take that. This high right here was 5470. What I did is I drew a trend regression channel up here. Now, a more conservative trader will wait till prices close below this trend regression channel, and then again you set your stop level here, okay, right about there, and you're going to set your entry point possibly here, and this is your risk, right? So from here to here is your risk level, from here to here is your reward level. So you know, you're anticipating prices to move here, right? You're risking from here to here. This also is a good trade if you're an aggressive trader. And you know, this would be a very short-term, almost intermediate-term type of trade that you're looking at. So we're anticipating prices to fall down to this 50 level. Conservatively, we're looking probably closer to 5150 is what we're looking at. So let's go and draw that in, which is basically, I'm going to take this close here, and that's what we're looking at. Change that. I'll change the colors now. Okay. Now let's go ahead and move to the metals. Let's first look at gold. Now gold is painting a pretty interesting story. I'm anticipating a short-term pullback in gold, but my upward price target still remains at 145.32. Where are prices going to move? I expect prices to move first to this 132.80 level, then 129.70 up to 126.55. If it moves to 126.55, there's still one more level, which is here at 123.57. That still will allow this to make one more attempt to this high. However, this market seems a little tired at this point. So we're going to keep our eye on it. You could, if you wanted to, if you're a more experienced trader and familiar with a straddle, this may not be a bad straddle, because we're going to see some, you know, pretty good movement either to the upside, which is here, or worst case, we're seeing, you know, movement all the way down here. You can see that's, you know, pretty even in terms of your upper and lower limits. And this has been a pretty choppy market. I would expect volatility to continue. Let's go to the silver, SLV. Now, silver is one of the trades that I am long, and I'm actually looking at taking some money off of the table just because I like where prices set. It'll be called 29.68 to 30.20. Again, we didn't call it a very precise price. Prices did come at $30 just because we expected some volatility here. But you see it popped up, then it moved down. You know, I'm still expecting prices to come in where this previous high was set, right, which is at 27.22. We're trace down, hit this trend line here, make one more attempt. If it does make one more attempt, breaks this high, we're looking at 30.25. But there's a good chance that this will also retrace down and follow gold's move to 26.57, 25 to 23.40. Now, one thing to note is as the dollar strengthens, the precious metals should decrease in value, and there's a reason for this. If the dollar is strengthening, right, it's by far a more liquid asset. So you'd rather have a strong liquid asset versus a strong illiquid asset, which is the metals. Now, trading the ETFs makes it pretty liquid, but in general, the ETFs don't necessarily drive the market prices as much as spot prices do. So keep a close eye on the dollar and expect that the metals will move inversely to the value of the dollar. The dollar is going to move to that. It's setting up to be to kind of strengthen this move. So, you know, if you watch this again, we talked about prices coming up, hitting this 23.44 level. It pulled back right to this 38% level, right, from this move here to here, and this would be considered a good base right here. Now, if prices do move up, then you would expect to retest at 23.44 up to 24.22. Again, if you wanted to trade this market, here's how I would trade it. I'd place a buy order right at this level here, right, which is about 23.25. Again, a stop loss slightly below this level here. We're going to call that, let's call it 23 or 22.74. And again, you have a pretty decent risk to reward ratio. As soon as prices hit this 23.44, I would immediately move my stop loss level up to this level here. That way you have a risk-free trade. Now the euro is the mirror image of the dollar, and the euro has showed some strength. It pulled, it fell down beyond this trend line here, pulled back to this throwback that we talked about, try to retest the throwback, right? And it's not finding a lot of strength. And again, if we look at this RSI, the Relative Strength Index, we're seeing, a clear divergence here, right? So our price targets still remain short-term price target of 128.12, intermediate of 123.45. So again, we're looking at the markets reversing, equities markets reversing to the downside, the dollar strengthening, the metals reversing to the downside, as well as the euro. That's a quick market update for today. If you like this video, give me a thumbs up, or if you have any suggestions or comments, please leave me a comment. Anyway, thank you and happy trading.